Healthcare is in free fall, down 3.1% this week, with a bearish trend.
Regulatory risks are escalating. This is what every serious investor needs to know about healthcare right now. Stay with me. Welcome back, or welcome if you are new to Financial Market Oracle.
This week, the overall market context is one of normal conditions, with the VIX index at 18.7, suggesting a relatively stable environment for investors. In this context, the healthcare sector is down slightly relative to the S&P 500, with the sector ETF, XLV, posting a decline of 3.1%. Despite this short-term underperformance, the healthcare sector deserves attention right now, given its long-term growth prospects and defensive characteristics. As investors navigate the current market landscape, healthcare stands out as a critical area of focus, driven by demographic trends, innovation, and the ongoing need for medical advancements. With valuations in the sector appearing relatively attractive, we believe it is essential to take a closer look at the trends and drivers shaping the healthcare space.
As we dive into the details, please keep in mind that this is educational content and not financial advice. Let us start with the technical picture and what the charts are telling us.
The healthcare sector, as represented by the XLV ETF, has seen a decline of 3.1% over the past week and 1.41% over the past month. The Relative Strength Index, or RSI, is currently at 46, which implies that the sector is approaching oversold territory, but still has some room to fall before reaching extreme levels.
This RSI reading is generally considered bearish, suggesting that the momentum is currently against the sector.
The trend direction is clearly downward, with conviction, as the sector has been struggling to find support. Key support levels likely exist around the recent lows, while resistance levels are probably situated near the recent highs. The current move does not appear to be a sustainable breakout, but rather an extended overreach to the downside, which could be due for a period of consolidation. A technical setup worth watching this week is the potential for a bounce off support, which could be a sign of a near-term reversal. However, without a clear change in momentum, it is difficult to say whether this would be a lasting turnaround or just a temporary reprieve.
Now let us look at the fundamental catalysts driving this sector.
The healthcare sector is poised for a notable week, driven by several fundamental drivers. From a macro perspective, the general conditions are providing a tailwind, with a VIX of 18.7 indicating a relatively stable market regime. This stability is likely to benefit the sector, as investors tend to favor defensive sectors like healthcare during periods of normal conditions.
Key stocks such as J&J, UNH, PFE, ABBV, and Merck are signaling a positive sector health, with their recent performance indicating a strong foundation for the sector.
This week, we are expecting some earnings reports from major players, which could provide further insights into the sector's health. Additionally, regulatory news and macro data could also move the sector, as any changes in policy or economic conditions could impact the demand for healthcare services.
The longer-term fundamental thesis for being positioned in this space remains strong, driven by an aging population, an increased focus on healthcare, and a strong pipeline of new treatments and technologies. As we look at the sector as a whole, it is clear that the tailwinds are outweighing the headwinds, and the sector is well positioned for growth. Please remember, this is educational content and not financial advice.
Next, let us talk about the specific risks you need to manage this week. Risks are elevated in the healthcare sector this week, with regulatory uncertainty, reimbursement pressures, and clinical trial outcomes representing the top threats to investor returns. Given the current volatility environment, with the VIX at 18.7, position sizing should be cautious, as sudden moves can have an outsized impact on portfolio performance. Unexpected headwinds, such as changes in government policy or surprise clinical trial failures, can also pose significant risks. To manage downside exposure, a disciplined framework is essential, incorporating thorough risk assessment, diversification, and a clear exit strategy. By understanding these risks and taking a proactive approach to risk management, investors can help mitigate potential losses. A well-structured portfolio, combined with ongoing monitoring and adjustments, can provide a foundation for navigating the challenges in healthcare.
And now for the strategic outlook, where does healthcare stand heading into next week?
We remain cautiously bullish on the healthcare sector this week, given the ongoing innovation in biotechnology.
A key theme to track is the emergence of personalized medicine, which could drive growth.
This is educational content and not financial advice. Consider these trends when assessing your portfolio. If you found this video insightful, please like, subscribe to Financial Market Oracle, and comment your healthcare watch list below. Until next week, stay informed, stay disciplined, and stay profitable. Cheers! This video is for educational and entertainment purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. Past performance is not indicative of future results.